Welcome back to Smart Stock Sam. And before we get into anything else, I just need to say it. The model was right. Again. This week, Iren played out almost exactly the way we mapped it. And if you were watching this channel, you already knew the entry zones, you already knew the targets, and you already knew where the floor was going to hold. That is not luck. That is a system built on precision. And today, we are going to break down exactly how it all unfolded, what Friday's brutal sell-off actually means, and most importantly, where this stock is heading next week and beyond. Because here is the thing. Iren just got knocked down by a wave of macro panic that had almost nothing to do with the company itself. And yet, the stock is sitting on a $9.7 billion Microsoft contract, trading at what independent models suggest is a 55% discount to its fair value, with institutional giants quietly piling in while retail investors are running for the exits. So could this be the last time you ever get to buy Iren at these levels? Let us find out. If you have been following Smart Stock Sam, you already knew this week was going to be a battleground, and it was, but it was also a showcase of exactly how powerful a clean technical model can be when the noise gets turned all the way up. Monday opened with an immediate gift. Iren dipped right into our designated buy zone, touching $38.94, landing practically on the number we had been watching. Within 24 hours, the stock ripped higher, and by Wednesday, it had hit a weekly high of $47.25. If you caught that move, you were sitting on massive gains in less than 48 hours. That is the model working in real time. Conservative targets cleared, upside captured, thesis validated. Then came Friday. Now, Friday hit like a freight train. But what happened on Friday was not a Iren story. It was a global story. You had geopolitical tensions between Iran and the United States, triggering a massive risk-off wave across markets. Then came the Producer Price Index report, showing wholesale inflation rising triple what economists had expected, absolutely torching any remaining hopes of near-term interest rate cuts. And then, as if that was not enough, a peer company in the AI infrastructure space, CoreWeave, plunged 20% after missing earnings. That dragged every single AI infrastructure name down with it in a wave of sector contagion. Iren dropped 7.4% in a single afternoon. But here is what really matters. Through all of that chaos, through geopolitical shocks and inflation data and sector-wide panic selling, the $39 structural floor held firm. Not for a moment, not briefly. It held. The thesis bent, but it did not break. Now, why does that floor matter so much? Because $39 is not an arbitrary number. It is the level where institutional money steps in. It is where the big players treat every dip as a buying opportunity, not a reason to sell. And the data on institutional behavior this week is genuinely stunning. While retail traders were panic-selling headlines, Goldman Sachs was busy increasing their position in Iren by 233%. Investnet added 152% to their stake. Harvest portfolios increased their holdings by over 50%. Right now, 42% of the total float is held by institutions including Citadel, Jane Street, and D.E. Shaw. These are not impulsive traders chasing momentum. These are the most sophisticated funds on the planet, and they are telling you, through their actions, exactly what they believe this stock is worth. So what does Wall Street actually think Iren is worth? The consensus analyst price target sits at $71.69. That is 75% upside from where the stock is trading today. Bernstein has a price target of $125. And independent valuation models place the intrinsic fair value at $94.84. Think about that for a second. The stock is sitting in the low 40s. Fair value, by conservative models, is nearly $95. That is a 55% discount to what this business is actually worth. Could Wall Street really be that wrong for that much longer? And the engine behind all of this value? The Microsoft contract. $9.7 billion. That is not a rumor. That is not a letter of intent. That is a signed, real deal. But here is what makes it even more extraordinary. That contract only utilizes 16% of Iren's total power portfolio. 84% of their capacity is still sitting there, available for the next deal, and the deal after that, and the one after that. And the company knows exactly what is coming, which is why they just secured an additional 1.6 gigawatts of power, a 50% increase in their total capacity, to meet the incoming demand. They are not reacting to the AI revolution. They are building the infrastructure that makes it possible. And if you think that is big, mark your calendar for April 2026, because that is when the Sweetwater site is scheduled for energization. The Sweetwater site is a 2,000 megawatt facility. Now consider this math. A 200 megawatt allocation was enough to generate a nearly $10 billion deal. So what does a 2,000 megawatt pipeline represent in total revenue potential? Is it possible that this single site alone could generate enough contracts to permanently reprice this stock? The market has not even begun to answer that question yet. Now let us talk technicals for next week, because the setup is unusually clean. Despite the sell-off, the relative strength index is sitting at 39.9, approaching oversold territory. Historically, that is a zone where bounces occur. Friday also saw a volume of 52 million shares, largely driven by Iren's official inclusion in the MSCI USA index. That index inclusion creates a category of mechanical, passive buyers who are now structurally locked into this stock, a hidden floor that the headlines completely missed. And then there is the short squeeze setup. Short interest is sitting at 13.85%, representing nearly 42 million shares that will eventually have to be bought back. The days to cover ratio sits between 1 and 1.5, meaning if any positive catalyst emerges, those shorts have almost no time to exit gracefully. Any de-escalation in the Middle East, any Sweetwater update, any new contract announcement, and you could see a rapid, explosive short squeeze that sends this price moving violently to the upside. Could that spark arrive next week? Given what is already building beneath the surface, the chances are anything but zero. The options market is confirming the same picture. There is a significant put wall at $41, which creates a mechanical support layer where market makers want to defend the stock. On the upside, major call walls sit at $45 and $50, acting as price magnets. If Iren can clear $42 resistance, those call walls begin pulling the price higher with real force. For next week's setup, the buy zone remains $39.50 to $40.50, aligning with Friday's low and the $39.99 Fibonacci pivot level. This is the same territory where institutions were defending the floor just days ago. If the stock opens weak and finds stabilization in that zone, that is your signal. The hard stop loss remains at $39 on a closing basis. Above that, the first target is $42 at the 20-day moving average, then $45, and if the squeeze ignites, $51 is the aggressive target for the week. The risk to reward on this setup is exceptional. Now, before we wrap up, I want to give you an important reminder like always. Nothing you hear on this channel is financial advice. I am not a licensed financial advisor. Everything discussed here is for educational and entertainment purposes only. All investing involves risk, and past performance, including model accuracy this week, is never a guarantee of future results. You should always do your own research and consult a qualified financial professional before making any investment decisions. Markets can move against you fast, and position sizing and risk management are your responsibility. So here is the bottom line. Macro fear has handed us a discounted entry into a Microsoft-backed AI infrastructure play that institutions are quietly loading up on. The $39 structural floor held. The model called it correctly. The fundamentals have not changed. The Sweetwater catalyst is weeks away. The short squeeze fuel is loaded, and the gap between the current price and fair value remains massive. Volatility is not the enemy here. It is the opportunity. Now I want to hear from you. If the Sweetwater site energizes on schedule in April and Iren lands even one more major contract in the next 90 days, what price do you think this stock could realistically hit by the end of 2026. Drop your number in the comments below. I read every single one, and I genuinely want to see what this community is thinking. If this breakdown gave you clarity and confidence, hit that like button. It helps more people find this analysis when they need it most. And if you are not subscribed yet, what are you waiting for? Smart Stock. Sam drops technical breakdowns like this every single week. Subscribe, hit the bell, and let us keep making smarter moves together. See you in the next one.